Hey, welcome to the Airway Roundtable. Today is the 16th of September, 2020. So welcome everyone. And our special guest today, Dave Thomas. Dave and I go back a long time. In fact, Dave talked to me as his first experience with the options trading world of 12 years ago.
That's right. Yeah, exactly. It was a long time ago.
So
That's when you were back in Germany.
I was in Germany. Yep. So before we get too far into this, just the normal disclosures that Airmere Corporation is not a broker-dealer or investor advisor. It's for educational purposes only. Options, futures, and currencies all involve risks and are not suitable for all investors. Past performance is not necessarily indicative of future results. If you want to read the whole thing, pause the recording or go to the bottom of any of our web pages. So with that, let me stop sharing my screen so we can flip over to yours.
Okay.
I know you gave us a little bit of a teaser
Oh,
in Trading Group 1
Tom,
yesterday.
it says
Yep.
host disabled participant screen sharing.
Oh, all right. Let's see. How do I turn that back? All panelists. There we go. Should be able to go now.
Got it.
It's all these Zoom security stuff.
Right, exactly.
All right, and I do see your PowerPoint.
Okay, very good. Well, I guess welcome everybody to the brandy new Flex Trade Alert service. Today we're doing a roundtable. We have talked about this on various venues. I guess the TG1 yesterday, and to the Dreamlifter subscribers who have been around since June. So they heard a lot of this on this past Monday, but we'll go into a little more detail today. And for people that know me, you could probably go grab a cup of coffee for 2 minutes, because I'm just going to spend about 2 minutes just a little bit about me, in case there are people here that don't know me. So I figure that might be a good way to do just a quick summary of kind of me. So a bit about me. Like I said, if you heard all this, time to go grab a cup of coffee, but come back in 2 minutes. But basically, like Tom was just saying, it began back in about 2008. When you're right, Tom, about 12 years ago, with a phone call to Tom over in Germany, and that's when I was looking at Sheridan Mentoring at the time, and it was kind of strange, because I get this guy that I've never met before for this operation based in Chicago, but their guy is in Germany. So I guess immediately, you start wondering, okay, what is this all legit and everything? So, and it's kind of funny, because I remember, literally until remember going out to one of these seminars or whatever, and actually meeting Dan Sheridan and stuff. It was like, I always wondered. I said, there's got to be typical for me, the doubting Thomas. I said, there's got to be a red herring in here someplace. This looks too good to be true. And I remember sitting down with Dan one day, and over dinner, I think after a seminar, and what I found out was the red herring was me. Is that I found out that I was the one that was probably going to hurt myself, as far as my perspectives about the whole options trading, and my doubting myself. And once I understood and actually dove into it and got educated and started to go through it, then it's like, okay, this is the real deal. So, and that was further enhanced by how it ended up through Sheridan Mentoring, that Dan Harvey at the time was kind of part-timing as one of helping out Dan Sheridan with his mentoring, which led to kind of a really nice opportunity for me, which I didn't know, because I didn't know Dan at the time, Dan Harvey, is that I ended up being mentored by him in the kind of the early, or like the first half of 2009, which then, was a fantastic experience. Dan's a great guy, and I know, Tom, you go back with Dan many years as well.
Oh, sure.
And so that was, a neat opportunity for me. It was soon thereafter, when I started to get into this, that I ran into, at one of these reunions, I ran into John Locke, and he was making a presentation. So as you can tell, this is a pretty tight community. As a matter of fact, I was just talking to John and Sherry yesterday. They were out traveling around, and so I ended up starting mentoring with John around 2011. I'm sorry, I started mentoring with John around 2011. Kind of went from I say, Dan Harvey was kind of the, undergraduate career and options, and then kind of led into kind of a further education as I kind of moved on with John around 2011, and even increased, I call it the kind of like the graduate degree or whatever that you get. But and then about 4 years later, I guess John had been teaching or mentoring to many students along the way, and he was just getting overwhelmed. And he asked me, if I would, help him. And and I was like, yeah. I mean, I couldn't believe that he asked me. I certainly felt that there was a lot of other people that were way more technically, have the technical awareness or the abilities to be able to understand it better than I did. But John told me, he says, but he says, you seem to have a good way with people, and maybe that's just many years of my past job experience and all that kind of stuff. And but whatever it was, I really, really enjoyed the next 5 years. Taught over probably about 100 students in all of the various, kind of the disciplines or the strategies that John certainly presented. And obviously, all of this comes around as far as, your general overall knowledge. And then, it turned out this year, I think Tom and I ended up having a phone call because we've kept in touch over the years. And I've done various presentations for Tom at Aeromere for M3 and I guess various other things. And, probably did other presentations with some other folks like Seth over at SMB. And so, it is a pretty tight community. And, Tom explored the idea of saying, hey, we've done trade alert services, and a friend of mine, Tim Pearson, who had kind of continued on with some of the road trip trade alert services and other services within Aeromere for trade alerts and stuff. And so I was aware of it and said, well, hey, maybe there's a chance that if I've got something. And as it turned out, I had been working on something for about 2 years after the kind of the debacle of early 2018 to try to, protect yourself in times of when the market's really heading down and stuff like that. So, I looked at that, and then we decided to say, well, okay. And the name Dreamlifter came around, and started with that, and started with that service back in June, and we've got been really happy with the amount of people that have been in the service so far. But as I told people, one thing that was really my passion was to really be able to share with people what I do for, I guess, the bulk of my trading. I always do the Dreamlifter trading, but that is a very much a rule-based guidelines, type of trade where it's very, well, it's something that you can back test. And I had done the back test on that going back to 2011 and found out that it was like, okay, this really worked out well. It worked out better. It improved things through through downturns. And all of that information and all of those concepts, I immediately rolled into not only the Dreamlifter trade, but also a trade that I've now termed the flex trade. And it's, it's pretty simple. It's just, the FLEX doesn't mean anything except for it means it's short just for flexible. Because I remember heard from, I think Dan Harvey was saying that, Davis is one thing you really need to be, or various other people say, to be nimble in the market was kind of a key phrase. Nimble meaning, if you can adapt and your strategies to what is happening with the market, you're going to, be way far ahead of the game as opposed to just keeping to a very, very formal rule set guideline. Although that rule set guideline, as I found through a small kind of focus group that I had done before starting the service, was actually something that was extremely attractive to a lot of the subscriber base, and because they wanted something that they didn't want to have to go out and learn what I've learned over the last 12 years. As a matter of fact, I even got a Skype message from one of the guys this morning, a subscriber this morning, saying that, well, he's now doing the flex trade, and he says, look, he says, he's working full time. He says, I don't have time for this, but I trust you. I know what we've done before. And he says, okay, he says, well, I'll go back and look at the stuff, but, it's, that's why I'm doing what I'm doing, is that, it's a trade alert service, because he just doesn't have the time to be able to do what he's doing, because he's got a full-time job that he's got. And so there's different things for different people. And Tom, you mentioned this to me, some months ago, is that, because I was always kind of wondering, is the trade alert service things, is there a market for people that really want that? And I guess, you convinced me that there was.
Well, there definitely is. People like to see what an experienced trader can do.
Exactly. And, I remember back in early 2009 when I would be going over trades with Dan Harvey, and one of my objectives was I always had these yellow legal line pads with all my questions that I would have for Dan going into a meeting, and one of the ones that I would always try to calibrate was, okay, well, I'm doing this trade and Dan's doing one very similar, and am I doing am I far behind him, and and what I'm doing? Do I, every time that he makes a trade, do I understand maybe what he's thinking? Now, of course, we were doing one-on-one mentoring, so we were really going into detail about everything, but just trying to calibrate myself with him, and is my, even to the point of profit or loss, am I making somewhere near him, or kind of thing. So that was always kind of a bar. Okay, so anyway, that's a bit about me, and kind of also how we ended up trying to get into this. So as usual, being an engineer for many years, I tend to love process, and as with anything, as with the flex trade, for me, what always helps me out is to put some thoughts on paper as to saying, okay, what is it that I'll be doing? And so my key thing, and this is obviously, it's gathering data. It's gathering data for the upcoming trade. And what do? I look at, 4 different indexes, the RUT, SPX, Dow, NDX. And what do I do with that? Well, I review the chart. I look at very, very basic technical analysis. This is not anything, I mean, people can go really, really in depth and crazy with technical analysis, and I don't. I just look at very basic things that I've, learned over the years, basic support resistance, simple moving averages, 20, 50, 200-day moving averages, various, things that I draw in diagonal, horizontal lines of support and resistance, different swing highs and lows. And basically the only thing I'm trying to figure out is, okay, I want to put on a trade. And I want to try to make a trade that makes or give it the highest probability of maximum profit over the next approximately 30-day trading range. Most of the trades that I do, or that I like to do, are typically 30 days. They range anywhere starting from about 30 days, or they could be 30 days, 60 day, maybe 80, 85 days away from expiration when I start them. But a lot of that depends upon what I see at the time that I go and put the trade on. Compare this to the Dreamlifter, it's very set. It's usually set right around 80, somewhere between 75 and 80 days. So many, it's usually, somewhere between, 10 and 40 points under the money or so, depending upon conditions, and, pretty delta neutral. So, but when I look at, so that's a very kind of, standard way of looking at it, okay? And that's why that was easy to go back and back test. This would have taken, an incredible amount of time to go back test the flex trade, because it would have had to take into account so many other things over the course of the last 11 years, which was just taking way too much time. So anyway, let's dive in. One of the things that I do, and I call the next step of the process, is basically take everything that I just showed on the earlier slide there, and I take a picture. I happen to use Snagit, which is kind of a drawing program. And what I do, and I'm not terribly good at Snagit, and I'm still, as far as the, so this little red line down here, you might wonder what this is. Well, that's a mistake. So except I couldn't figure out how to erase it. So it's still there. So don't worry about this little red line right here. But basically I looked at, this was last Thursday when I took this picture. So it does not include last Friday, Monday, Tuesday, or today, okay? But I looked at it and said, okay, over the next time period, and I've kept these, so this is in TOS. It's the RUT, okay, it's a daily chart in the RUT, okay? And what I do is I keep a constant tally of various things, okay? And I can go, and this is a quick snapshot, but I'll actually go out live later to my actual RUT and I'll be able to show you a little bit more of what I do. But basically, I'm taking various, I kind of make some little rectangular boxes over here when I think the RUT has been in certain kind of trading zones, as you can see here, over the time period, okay? But what I do most importantly is I'm trying to project over the next 30 days. Now, I am not trying to predict whether we go up or down tomorrow. The only thing I'm trying to do is say, okay, within the next 30 days, do I have a pretty good indication based upon looking at all the data, all the other indexes, all of the other technical analysis, and saying, okay, where do I think the probabilities are that will potentially go, and all of these lines, this red line up here, and actually I think I can do this. I think I might be able to zoom in a little bit. Tom, is that zooming in just on my screen, or is that zooming in for everybody?
No, it zoomed in for everybody.
Oh, fantastic. So I'll just get in a little bit tighter here so people can see it. So you can see here, there's a red line drawn in here, a little green squiggly line, a purple line here, kind of a orangey kind of, I don't know, whatever that color is, drawn down here, and then a blue line. Then of course my mistake down here, the red line down here. So don't forget about this thing down here. So what I'm looking here is trying to figure out, and this is truly, it's based upon, this isn't just, these are not drawn just willy-nilly. These are literally drawn by looking at all of the various points of either, various lines of resistance diagonals. What trading range has it been in over the last period of time? What have been the swing highs, the swing lows? And trying to figure out, with experience, what does the RUT usually do? Does it usually test certain things? Does it test various lows of the diagonal, horizontal, possibly resistance? Does it tend to possibly go up here to to resistance, and then kind of hang out here for a little while, as the red line would show? The green line, does it maybe come down to either horizontal or diagonal resistance, and then kind of bounce from there, and then maybe come up to the bottom of the trading range here, which has been going on for the last few weeks here, and then kind of go sideways? Or possibly does it go down to the horizontal trading, which is also kind of interesting because it's almost the bottom of this current little range right here, but it's also then, if you look, it's the top of this trading box right here. So all these things are kind of tied in to say, like, okay, I've seen from the past that it seems to make some of these patterns where all of a sudden maybe then it will pop up here, and well, it's either going to do a couple things. It's either going to come down, maybe pop through, or it could pop up to this bottom of this trading range here, and then say, oh no, it falters and it tests it, but the market doesn't see it, and then it starts diving down. And sometimes it could dive down here, which could be almost like, if you look here, about the bottom of the trading range in this area here, or maybe just maybe like the blue line, it bottoms out at around 1450 and it comes down to this trading range. So I take a look at this and say, okay, over the next 30 days, what do I think? And this is what I did like last Thursday and try to prepare for the first flex trade, which actually, just for everybody to know, I actually did enter yesterday. And I will show that to everybody and let you know what it is. But I took a look at the ranges here, and I said between the red line, the green line, the blue line, I think that between about 1450 and about 1600 within the next 30 days, I think that that's possibly what could happen. Okay. Now, could the purple line happen? Could the little orangey line here happen? Absolutely. Okay. I don't have the crystal ball, but I'm trying to look at this and saying, okay, how then do I go structure a trade? How do I go put a trade together that will hopefully make good profit within this trading zone? Okay, so it's about 150 point trading zone, within the next 30 days. Okay, now, can it go outside of this? Could it go up to 1600 and go even further? Absolutely. Could it go down to 1450, go down further? Yes. Could it go down to 1380 and go further? Yes. Okay. So what I look at this is that between 1600 and 1450, I designed a trade that would work well within that time frame. But well, knowing that if those lines, so the key thing is that I look at key decision points. And so constantly what I'm monitoring is my key decision points, it's one of the things that I always was very much in favor of when, a lot of this, I was taught by others, and it was saying that you've got to have, but now I'm kind of developing those things myself about what those points are, is saying, okay, what happens when the market goes to certain points? And if it does that, do I have the information and do I have my decision points together to say, then what do I do? So for instance, if we go down to 1450, at the minute and this is, it would be the outside of the trading range, within a trading day of it closing below 1450, I'm then convinced that we're outside of the trading range and that we're now going to be in either this purple or this little mustard colored one here, and we're heading down. So I would be making decisions. Now, could it break through here and then for some reason pop back up into the trading range? Yes. Okay. All those, and have I seen those things happen? Yes. So, like I said, it's not to say that this is a crystal ball, but it's basically this is a work in process. Every single one of these trades is built upon going in, like I said, gathering the data, looking at it, trying to figure out from all the four indexes what's happening. They all tend to, do different things within each other. Okay, meaning sometimes the NDX will be the leader, sometimes the RUT will be the leader, sometimes there'll be a follower. Okay, so I'm taking all those things into consideration to try to make good decision points. Now, are they always correct? Obviously, no. Okay, I'll be the first to admit it. But, I'm trying to increase the probability of success of being able to use this process. And as a matter of fact, years ago, I had actually worked with another guy who I had as kind of a trading buddy, and we literally had gone and did this, and he actually used to be the one to kind of draw the stuff because he knew the software better than I. But we would do this together, and while we did that together as trading buddies, and we'd put on these trades together, what we found was that our actual profit percentages were the highest when we would do this. Sometimes we get lazy, and sometimes a month or two would go by and we like, oh, we didn't get a chance to talk to each other, and we ended up not doing this. And I found that my actual results would falter because of it. So maybe it's the old adage, when you put the work in and you do the analysis and you try your best and put all the work in and you try to understand what's going on, that will yield better results. Kind of old school, I know, but it's kind of like if you put in the work, you're going to get better results. And I think over the long term, I've seen that result over the past years. So what I've tried to figure out is saying, okay, I can utilize this, and as opposed to just offering people the Dreamlifter service, which is just buy the book, which would be great for a group of people, and I trade that regularly myself because I want to have something that is just super easy. I put it on and I don't have to go through all this process, okay? But I know there's also, when I went through the kind of focus group process, there was also a group of people that were maybe just as interested in the Dreamlifter, but also had interest in being able to do something more complicated, and they wanted to get a little bit more involved. Maybe they wanted to do some of the process themselves, but they also wanted to be able to see someone that had done it and has got experience do it, and basically have the ability to follow a service that would show that. So I said, okay. I said, if that's what people want, then that's what I'll give them. So that's kind of the evolution, okay? And let's see, let me go on to the. So basically, as I say here, I look at the possible trade designs that fit the 30-day window. So, and then I just kind of went through a lot of that. Determine the highest probability of the paths I expect to happen. Okay, and then how would I adjust in various market situations? Okay, and I just put a note here myself. Look at the live charts and toss. So maybe Tom, is there any questions to answer at this point, or?
Let's see. The process curve fitting safe or not? It's the only question.
Say that again.
The process, is curve fitting safe or not? That's the question.
Yeah, I don't know about safe, but what I'm looking at is saying, curve fitting to me is usually putting a certain idea and then going, and in other words, if it works today, then go and assume then that will work in all situations, which with the way that I'm doing this is that every time that I actually go and put a new trade on, I'm actually coming up with a new idea. Okay, so in other words, I'm looking at things very freshly every time I initiate a new trade. So and I would hope that that helps with maybe the safety factor of it. Is it's not I'm looking at the experience of doing this over a period of time and looking at taking that and being able to roll that into then all the current information that's happening to then address how do I look out over the next 30 days. Okay, so safety maybe comes in ways of maybe just experience and also being able to look at I think curve fitting is more of the sense of I think that I think of back testing where even if I'd come up with trade design, I would take that and then say, okay, take whatever that hypothesis or trade design is, then go look over the last, X amount of years. So I remember I used to discuss this factor with John Locke about, curve fitting or trade design. And, if you actually go back and have the ability to go back over time, if you've got something that you can back test, then that's just good creative trade design because you're taking new information, looking at it, see if that helps the current situation, which you could say, gee, that's kind of curve fitting. But if you take that information and go back over time and see how it works over all different markets, then that's good trade design. Okay, but usually, people don't like to do that because it takes a lot of time. With the flex trade, every month is fresh. Okay, because every month and continuous through each month, it's being constantly reevaluated. But those charts, like I was just showing in the last slide with those various curves and stuff for the paths that I drew in, those are pretty much locked in for the current month because I've set a trade up to be able to address that. Okay, so it is locked in for I guess a period of 30 days. So let's look. I got these slides from the Dreamlifter presentation I did, and this is just a quick little sidelight. Is that one of the things, even with the flex trade, there is I have loaded in all of the rule set that I had with determining whether the trades are in contango or backwardation, and those rule sets would come into play within the flex trade as well as or if the situations warrant that, if we end up in backwardation. So these are just a couple of things I just threw in here just to be able to show people that hadn't seen it before that I use this as one of my decision points to take a look at when possibly it might be time to do some changing, and this would be used in addition with all the other things that I look at. So just want to make people aware that this is not just something for Dreamlifter. And I'm going to go here to now, let's see, Tom, I'm going to go to, just going to stop sharing for a second, just so I can get my thing set up here. Okay. Okay, Tom, can you see that my Thinkorswim screen?
I do.
Okay. So let me just switch things out here. And so what I've got here is this is just my live toss screen, okay, with the first flex trade that it was put on yesterday, okay? And just to kind of give you an idea as to, what I'm looking at is that when I looked at the initial design of the trade, this is the trade that I initiated yesterday. But if you kind of go back, and I just want to make people aware that, yes, this trade is on right now. But if you go back and I look at this trade here, which is these first two butterflies, okay, what I'm looking at, okay, is the combination of the trade. And this was actually put on, and this was actually initially, this was, let me just reset this a little bit. I've changed this a little bit. As a matter of fact, let me go and do something a little different here just to show people. I'm just going to change this a little bit to what I had before. Okay, let me just change this. Okay, so when I had what these two trades that I've got clicked right here were my two that I had when I looked at my initial process of putting the trade on. Okay, when I looked at the charts there, and if you remember when I drew those lines in, my bottom line was at 1450, which is right here, and the top line was right up around 1600. Okay, so I said within this time period, excuse me, let me just grab a little coffee here. Okay, sorry about that. When I look at the time frame of 30 days, I said, okay, let's design a trade. And what I said is that I want to have a trading range somewhere between around 1450 and about 1600. It's not to say that the trade can I still make money if it goes beyond or under 1450, or if it goes beyond 1600. It just means that this will be the range at which the probability of profit will be the highest. So for example, if you take a look at 9/16 here, and let's pop out to a month from now, let's say to 10/16, okay, you would see that, from a profit, which is, you can see up here as I move my cursor around, you can see up here, the maximum profit is pretty much right up around in this tent here, but there's profit being made all the way back down to these shorts back here, okay, and the lower tent. So I'm looking at, and obviously, would there be modifications during this process? Sure, okay, and would I put this trade on exactly like this to start off with? Not necessarily, okay? As evidenced by yesterday, I started the trade because of where we were with just this portion of it, which was the lower portion of it. And part of that was based upon my look at what was going on with the market yesterday. And I was looking and saying, I wanted to be able to, I knew I was going to be able to go and put both of these on, okay? Now, the timing of when you actually put these things on and the strikes that you put them on could be different, okay? And what I mean by that is, if you take a look at today, here's the rut, up 22 points, okay? Up a significant amount above all the other indexes that I look at, the SPX, the Dow, the NDX, okay? So I'm trying to take that into account for all these, okay? And so this is kind of near term, okay, but let me go back and change this to today, okay? So what I'm looking at is trying to say, okay, well, when I put these things on, I want to be able to create a range, okay, a trading range. And then once I have this other one on, which I'll put on within maybe the next day or two, depending upon what the market does, what then is that I will have options or abilities to be able to, depending upon my decision criteria and decision points along the way, of what do I do as the market progresses underneath this time area between this range area from about 1450 up to about 1600, okay? I will have trade modifications during that time frame, but probably slight modifications. So, depending upon if the market really takes off, it could be that, this structure is what it is today, okay? Can this change? Absolutely, okay? And remember, we're trying to be flexible. We're trying to be nimble, okay? So the initial foray is, here's where it is, and it's set. My initial indication is that I think it was going to last between 1450 and 1600, okay? So I've got plans that if in fact it goes up to 1600, okay, question is, does it go up today? Or does it go up 2 weeks from now or 3 weeks from now? Same thing happens on the downside. Do we sit around here? Does it go down a little bit over the next 2, 5, 10 days? What happens? It makes a huge difference, okay, in the decision points of when, because a lot of people always deal with, okay, well, what are you going to do, Dave? What kind of a modification are you going to do? Well, to be honest, the modifications on this are not, hugely complicated, okay? But the thought process going behind it is, and why, and when also, the when is dictated by where we are within, when I go look back at, the PowerPoint, and when I look back at, this chart right here, okay? When all of this happens here is critical to me, okay? So when I go and make decisions about whether, depending on where we are within the tent, and one of the things that was also mentioned by one of the other subscribers was that they said, Dave, we really like how you have your structures here, and they're fairly wide. So they're covering a fairly wide range, and especially because of lately, with the market being what it is, and the wide range and the of where the rut has gone, you've got to be able to have some sort of an idea of where it's going over a period of time, and be able to have what I found to be a little bit more gentler as far as a trade is to be able to kind of blanket it or bracket it with a trade structure, as opposed to necessarily putting this all on at the very, very first day. Put it on a little gradually, like I put this on here, and then, okay, based upon what else I see happening with the market, okay, it could be that, we're sitting here with only -1 delta. So it's very, very, flat as a pancake. It's got time to move. But when I go and if I see something where I see continued growth, like today, up 22 points, there's a good possibility today that I will go and put on this other butterfly down here. If in fact I see, the next, next hours, or, towards the end of the day, if I see this happening, and I'm convinced based upon all the other things that it looks like, there's higher probability that we're maybe heading up today, then I'd be able to go and also, there's the ability to be able to go modify what these strikes are. I'm keeping the shorts where they are, but the upper longs here at 1590, for instance, if I wanted to do things a little bit differently and I wanted to go in and have a little bit more positive delta, I could also bring this down to 1580, have a little bit more positive delta, and put this, if I really see all the market going crazy, we have the ability to be able to make these kind of modifications. This could be put on initially if I see it, but if it isn't, and I end up putting it on, let's say with a 1600, okay, which maybe all of a sudden I see, maybe by the end of the day we have a big down surge, okay, well, I could still put this on and just modify one strike here and create something where it's still under the tent and still fits within, how I'm trying to look at the whole trade from, 1600 out to 1450. So they are easy. So I could put this trade on and then do just a quick little vertical of rolling some of these 1600s down to 1590, or like I said, I could put it on at the start and go from negative delta to slightly positive delta. Or if I felt really that the market was going crazy, I could easily change this and go even more delta, okay, to be able to go, and if I really see things running. So that's what I mean about being flexible, okay, but also having the knowledge of being able to go and do this. So this is to the upside. How about if we didn't have this on, okay, and all of a sudden, the end of the day or tomorrow, we start to see a big downturn, okay? Well, one of the things to be able to do is, take this trade, and instead of having this on, and I'm not going to mess with this one. Let's say this is, yeah, so it's the same as this one down here, except for the top strikes. So as you can see here, I could actually go and go from this trade, which I have on right now, 1500, 14, 15, 30, 1390, and I could switch it where I could actually go and make this an even butterfly at 1510, 1450, 1390, just by moving this top long from 1500 up to 1510, grab some negative delta. And if I saw this thing, racing down, I have the ability to be able to go and be nimble, be flexible, and take advantage of something where all of a sudden we start to see the whole market just fall apart. One of the things I'm aware of today, in about a little bit less than 2.5 hours, there's an FOMC meeting, okay? So I'm aware of that. And I'm also aware that, those can, provide some kind of crazy times in the market. And that's why today, as part of this, service, if you want to call it, is, that's what you're counting on, is that I'm looking and I'm thinking about these things. I'm recognizing that these events do happen, and I'm taking those into account, as well as all of the other things that I mentioned as far as the initial design. So when I take a look at a simple thing like today, the FOMC is going to come out. I have no idea what they're going to say. Okay, we'll find out in a couple hours. Okay, will we probably see some kind of up and down of the market during around that time frame? Sure. Okay, but that's why I probably that's why I ended up putting just this trade on yesterday, but now I'm also waiting, even though it's up 22 points this morning, okay? See if it's still true. Yeah, up, oh, now up about 20 points, almost 21. But as you can see, the RVX today is up about 2%. Not that unusual prior to an FOMC announcement. Also, the VIX is up slightly. Not that unusual, okay? But we'll usually see whenever they make their announcement at 11, sometime between 11 my time, Pacific time. So the next 2.5 hours, once they have made their announcement, normally you'll see a reaction in the volatility of the market where you'll see the volatility drop. And because some fear, some knowledge has been provided in the market, and some of the fear will have subsided because they say, okay, now we know at least what the FOMC is doing. They're not going to do something that's strange or unnatural or different that we've already baked into our numbers. And so these are parts, and I'm just trying to help you through the process of what I use on a daily basis. Since this is my career, this is my job, I take it very seriously, and I want to be able to go through and provide anybody within the service the same education or the same knowledge that I have to be able to help people along, so that when I put out a trade alert, you understand, and that a lot of the thought process that has gone behind it. Okay, so anyway, so that's the gist. I think that I'm very happy to see that there'll be some other new people coming in to the service that are. I know I had some people that were kind of waiting for the flex to come around before they join. So feel free to join in. I hope that I provided you this morning with a little bit of an insight. Trying to keep this hopefully maybe not an hour, but I guess we've gone already about 45 minutes. So
there was a
trying to help, and then maybe hit some questions.
We had a question. Can you have Flex and Dreamlifter in the same account, or too many issues of stepping on strikes between the two trades?
You can have it in the same account. So for instance, within Thinkorswim, okay, you could, if you have it in the same account, and if it's in the same expiration, and if we have the same strikes, it could get a little confusing, okay? That's why what I do is I keep things in O&E. So for instance, here's my Flex Trade Alert service in O&E, and here's my trade that I've got in so far. And then, but also what I've got in a different account, okay, is my Dreamlifter Trade Alert service, which is here. And here's the trade from there, which I haven't actually updated. So this needs to be updated, but I have it in a totally different account. But within, I trade them in different accounts within Thinkorswim. So within, and I've got various accounts. I've got taxable accounts. I've got Roth accounts, and so I just kind of split the trades up within TOS to be able to do that. But so there's several different ways of doing it. One way also within TOS is you could, let's see, within TOS, I know there's a way, and I don't know, Tom, maybe you're familiar with this, but I know you can set up groupings.
Oh, I'm more of an IB user.
Yeah, that's true. But I know within TOS there is a way to be able to go into. I know, like for instance, if there was this trade here, let me just kind of look for a quick moment here. So here's my trade that I put on. Well, this is. Let me go into this one. So here's the flex trade that I put in yesterday. Okay, and this is in monitor account statement. Okay, and if I right click on this, yeah, okay, right here where I say move to a group. So I could come down here and add a group. Okay, and I would call it flex trade. And then within your account, you can actually go and separate the two. So it's a little bit of extra work, but if you don't want to pay for an extra service like I've got, like the OptionNet Explorer or OptionView, TOS does provide this option to you. So you can go into your trade, like I said, again, monitor account statement, come down here, do a right click and saying, okay, take this trade and move it into a group. And I could go down here and just say add a group, and then I could just name it. And actually, well, let me just do this just so I could show people. If you just add a group, and let's say I call it Flex, say Flex November 30. Okay, and I'd say okay. And I believe if I go out here to activity and positions, that it is. Here it comes up. See where it shows this group? It says Flex November 30. Okay, and here's the actual details. Okay, whereas before this would have not been. There would have been no group name here. I forget what it would be called. Like actually, I could take a look at my other one here. Oh, it says unallocated. Okay, so here's my Dreamlifter trade that I've got on right now. And because I've got it in different accounts, I don't have to name the group. So it just says unallocated. But if you go into a different account, or that could have been the same one, you just go into monitor, account statement, again, right click, move to group. And now, okay, so here's the trade. So let's say I do a different trade. I can just go and click here, move to group, and I just click right here where it says Flex November 30, click on that, and it'll move it right into, let's see, it'll move it right into this group right here. Okay, so hopefully, I actually forgot about the grouping, but yeah, that's something that you can do within TOS. So little experience. TOS didn't always have that, but I know that's something that
Nice
I think.
feature.
Yeah. So you could set this up where, like I said, even if you had multiple different other trades within the same group, you could have Flex, and you could also have another one here that could be Dreamlifter November 30, and it would, you'd have to just separate that, but you just simply go in to, like I said, account statement, and go into each trade like here, okay, and just right click, move to group, and just, if this was a Dreamlifter, I just say add group here, and it would just then create a group that says Dreamlifter or whatever, whichever one you have.
Okay, Alan had a question. Will this be ongoing training to learn as we go?
No, it will be, I guess it's both. It's ongoing training as we go.
Yeah, it's I guess a little bit of training and then trading and explaining what you're doing. So yeah.
Yeah, I mean, we'll use the Monday weekly webinars that I do to go through this, but typically for the Dreamlifter, there's not a lot to go over, but there's some. But I suspect now that a good portion of the time we'll be going over doing a little bit more of the flex trade for sure, and much of that would be addressed within those Monday weekly webinars.
And I did want to mention before people bug out is that the Dreamlifter and the Flex is just one subscription price to get both, right?
That's correct. Yeah, I had, it could be that in the future, depending upon the amount of work it is and everything, because it is definitely a lot more work for me. I may separate the two, but we'll see how that goes over time. But for now, for any of the current subscribers or new subscribers coming in, I wanted to be able to offer both services for the same price. And my viewpoint, I think it's a tremendous value to be able to get both right now for sure. And then we'll see over time, what happens. But for the time period, at least for people to kind of get used to both of them, I figured I'd be able to go and be able to offer it, at the same price right now for both. So.
And I've got an order link if people don't have the Dreamlifter already, because if you already have the Dreamlifter, I've already added the Flex trade to your account. But if you're new and you want to sign up, it's just airmere.com/flex.
Certainly, that could be utilized in the future. It just so happens that this month, the Dreamlifter was off. We were starting the Flex at this time. The November 30th expiration cycle was there. And so if I took a look at what the other opportunities were, it was either, 75-day trade, the 65-day trade was too short, and the 93-day was too long. So when I put it on, that's why I decided to put both on at the November 30th. But in the future, could there be different months? Could there be different expiration cycles? Absolutely. As a matter of fact, I think there'll be a higher probability that they'll be in different expiration cycles over time, because the flex trade could be, we might 20 days. So there's always the chance where, like, for example, if this was well, right now, if I switch over to the Dreamlift, they're both in the same time frame. They're both in the same time frame right here. But if I get up money in the Dreamlifter, it could be that I might be jumping out into this December 18th expiration cycle, and the flex trade could be still in the November 30th, depending upon what's going on. So I would say this is more of an oddity that they're both right at the same cycle right now. But like I said, for keeping things sanity purposes within your trades, being able to go and move those into either, if you have option view or option explore like I do, or if you don't have those, you don't want to spend money on those, which I can understand, then you could simply just go into TOS if you have TOS and just use that group function.
And Chris says Steve, I got that one. Steve said he uses the groups feature and works well for organization. And
okay,
Mark's,
great. Yeah,
and
I've used it in the past. Yeah.
And Mark said profit target ?
Profit target for the flex. I'm with the Dreamlifter trade. Like I said, I'm between around 32% a year on average over the last 90 years or so, and I'd be looking to do something better than the flex trade. I don't have, I can't show you history of doing the flex trade, because I said this is, it hasn't been back tested, and so, but I looked to just even this past year when the Dreamlifter trade was down a couple percent, and my flex trade from this year earlier was up about 5%. So there's a difference of about 7% between that and the Dreamlifter at that time frame back, I think in the April-May timeframe. So I'm counting, because of the ability to be flexible and nimble, what I'm counting for is to improve upon the Dreamlifter profit percentage. The exact number, I don't know. But as far as targets, I would definitely be looking at targeting more than the Dreamlifter. And what it is over time, we'll see. But it's definitely, because of the work involved and everything, I'll be definitely looking to increase the the profit percentage for sure with the flex trade. I would certainly hope it to be.
Makes sense.
That is the objective.
Right.
It is to maximize profits.
And it seems like the flex and the Dreamlifter are similar days to entry for to enter, around 80-90 days.
Not necessarily. The Dreamlifter trade, I could put it on. I'm sorry, the flex trade, I could be putting it on at 30 days.
Okay.
I could be putting on at 45, 60, 75, 80. Yeah, it doesn't. That's all depending upon what I'm viewing, because I may be looking at the prices. I could be looking at the prices and the shape of the T+0 line and how it fits in with the process of looking at what the market is doing, and saying, gee, a 30-day trade here, based upon maybe based on what volatility is doing, 30-day trade looks like it's got a higher chance of getting profit earlier than putting it on at 60 or 80 or 75 days. Right. So no, it's totally. It just so happens that this month, this is where it was started, but. There is no rule beyond that, except for every month when I go in and look at it, I'll be looking at various time frames and putting on, as I think I was chatting with one of my old-time friends, Dave Hines, the other day, where it was like, yeah, we were looking at prices at around this November 30th time frame, but I was also looking at prices at the earlier time frames and seeing how those compared. Whether this 30-day trade would have been better, whether a 40 to 40-day trade would have been better, looking at the prices, and also then looking at how those structures look compared to what I was looking for. So all of that is coming into the analysis. Okay, and those are things that I've learned how to do and been taught, for many, many years to, don't get stuck just in one thing. But for the people that want to have the ability to explore that, to be nimble with it, to be flexible, that's going to be available. what you don't get from that is the 9 years worth of back testing, something that's probably a little more stable and a historical performance. So you get different things with each one. Okay.
And then Mark asks, will you be putting on more than one flex trade at a time?
No,
Okay, just one at a time.
no, all these will be one at a time. And typically also both the Flex and the Dreamlifter will be just checking once a day.
And what kind of margins required for each one?
Each of them are 20,000
Okay,
at 20,000 a piece.
gotcha.
Okay. As a matter of fact, Tom, just as a note, we can talk later about this, but there's something within, I think it's totaling the two as far as margin within the software. You might take a peek at that within
Okay,
Aramir.
all right, we'll do that. All right, I think that's all the questions we've got.
All right. Well, that's great. Well, like I said, anybody that wants to join in, feel free.
First month is half off too.
That's correct. Yeah, new subscribers, first month is half off. And like I said, trades have started. And thanks for Tom. I totally forgot about that, for mentioning that. But the first trade was started yesterday. Good chance that I'll probably be making a modification or an addition, like we talked about earlier when we looked at the when we looked at the screen here. You know, looking at possibly adding in something to kind of create the blanket idea of the trade. So this structure and all that could very well be in place by the end of the day, or it may not be, depending upon how the market goes. So, you know, stay tuned. But for people that want to join in, I sincerely welcome you, and I look forward to working with you. Like I said, I've worked with people over many, many years with personally one-on-one mentoring. I've enjoyed many, great relationships when it came with that. And some of those same people are now subscribers. And I would hope that, the rest of the folks that are on the current subscriber base and new folks that hopefully might join in with Flex we'd all have a great time together, and hopefully we'd learn something, and ideally be able to go and what the objective is make some money here.
That's what it's all about, isn't it?
So Tom, thanks for allowing me to come onto the roundtable here to give people a little bit more understanding about what's happening.
Oh, sure. You're welcome. And I'll get the link posted in the library and all that.
Yeah, because I think I saw in the email that went out, Tom, it said it was to join up. It had like Dreamlifter at the back, so I wasn't sure if you.
Yeah, I hadn't built it yet. I just did. So aramir.com/flex. Pretty easy.
Okay, so that's new. Okay.
Yep.
Okay, but it's basically you can either do both or either.
Well, you sign up for either, and if you sign up for Flex, I'll add Flex and Dreamlifter. If you sign up for Dreamlifter, I'll add the Flex. So
okay, but people
sign up to either one, yeah.
But if you sign up for the Flex one today, then you'll get for new subscribers, you would get half off for this month.
Correct. Yep.
Yeah. Okay. Great. Well, fantastic. Well, thanks, Tom.
All right. Thanks, everyone. Really appreciate your time, and I'll get this posted. Don't forget, if you're not a subscriber to our YouTube channel, you'll get notifications when I post roundtable meetings on there. So that's free, and I highly suggest doing that. So again, thanks, Dave. Really appreciate it. Look forward to the Flex trades and see how they do.
All right. Sounds good. Thanks, Tom.
All right. Thanks everyone.
Thanks, everybody.
Right,
Bye-bye.
Bye-bye.